Good morning, traders. This is David with Alexander Trade and Investment Group. And in this video, I just wanted to do a quick video about options and options contracts, strike prices. I actually got the idea from talking to one of my mentees this morning about the importance of delta. Delta, theta, gamma, all of that stuff that you can find in the options contract or the options ladder. But really, the only thing you need to focus on is the delta and the importance of the delta. So I'm going to share my screen and I'm going to show you guys an options ladder. This is TOS. This is the desktop version. Right here in the middle is the options ladder, right? And I have IWM and I have strike price of today. When you first download TD Ameritrade and you go into your strike price or your ladder, I should say, it's going to look something like this. It's going to have the calls and the puts, and on each side it has last price or last X change, net change, bid, and ask on both the put side and the call side. Um, Really, you don't need the last. You don't need the net change. The only thing you need is bid and ask and delta on either side. So when you first open it up, you're very new to the desktop version. It's gonna have this default. So to change it, you just go up to layouts and there's a drop down. Click that, and it gives you a couple of options. Right, it gives you volume, open interest, implied volume, probability, gives you position, delta, gamma, theta. It gives you those. So if you click on delta and gamma, it shows you the delta, which is important. Gamma, you don't need theta, and just don't need those, right? So what I do is I go back to the layout and I just put the only thing that I need is the delta. Customize, and I remove the three that I don't need here and just keep delta. Hit OK, right? And then you want to save it. So save as, and let's see, delta added is what I like to add. Save it. So when you come back to it and for whatever reason it may show this again, you can always go drop down into your save, delta added, go add. And now all you have is delta, bid, ask on both the call and the put side. Delta is important because it allows you to know how fast or how slow you're going to go into profit or into a drawdown. The rule of thumb that I have always heard is you want to delta anything over 30. Like anything over 30 or above will get you into profit faster than it would be if it's below. Right? Some people say delta means probability. So a 30% or 30 delta means 30% in probability. I've heard that once, but I don't think that to be true. It's all about price of your options contract and how fast you become in profit or in drawdown. It's just the change. The delta is just the change in your premium due to the underlying price of whatever you're playing going up or down. Right. So if you were in profit and let's say you play IWM today, we play IWM to the upside. So the more price went up, the faster we became in profit on our options contract. If you're going to do anything below a 30, it's going to move. You can beat the price can go in your direction that you chose, but your profit and your options won't move as fast. So anything 30 or above will move pretty much in step with price. Anything below, it will move with price, but very slow. Right. So you'll see, like me, I'm a 20 cent guy. So you'll see where price may have went up in your direction or down in your direction, depending on what you play. But your options contract is not moving with it. You think you should be in profit right now, right? And that's because of the delta, right? Anything above a 30 is perfect. Anything below, you'll see it takes time to get money, right? And you normally see 30 and above in strike prices that's just out of the money, right? Of course, you're going to see it in the money. In the money is going to show you probably 50 or above, right? But out of the money, just slightly out of the money where you're going to see 30 and above. All right. So this one right here, this is a put strike price of 221. See, it's right at 30. That's what you need. If it gets 29 or something like that, 28, we're not playing it. Right. Here's a call slightly out of the money. I don't know where price is right now. Let's see. Price is currently at 221.81. So 221s are in the money. 222s are slightly out of the money, right? Because we had 221.80, I think it was. So slightly out of the money. You see there's a delta of 45. Right. So if you see some evidence, maybe an area of interest, extreme high, well, in this case, it would be extreme low or single prints. This would be the one around that 221.80. You're gonna pay the strike price of 222, or you can pay 221 as well. It's gonna be more expensive, but you can see how expensive it is, less than out of the money, right? Right in the money is $1.21. Out of the money, slightly out of the money, 60 cents. So you're gonna invest more in the money than you would out, but that's what you want. Anything 30 or above. So let's say for whatever reason, 22. So what was the price? 21.96 became an area of interest to buy. You would play on the call side 22, slightly out of the money, and that's 50 cents. So that's 20 cents more than you would normally see, because 30 is like the minimum. So you should become in profit. As if price was to continue to go up, you should be in profit pretty quickly. Right. So that's the difference between a delta and anything else. Delta is in line in step with price, right? The higher the delta, the quicker you will become in profit. All right, I hope that helped. I'm going to send this to a few people that I know that work with TOS as well. Anybody else that have any questions on here, Think of Swim, can always send me a message on YouTube. All right, guys. Till next time. Have a great one. Peace.